Hey guys, so I just wanted to talk about HIMS and HERS, ticker symbol HIMS, and what could the value of this company be in the future, right? So right now we're sub $5 billion market cap. We have about 1.5 million subscribers as the end of 2023, and we're poised to grow this year, sub 50%. So I just assumed for 2024, let's grow 40%. Okay, and then after that, I assumed we have about a CAGR of 30%. I think this is conservative based on guidance. This is pretty darn conservative. But if there's a high year and there's a low year, average it out to 30%. So by the end of 2030, we get about 10 million subscribers. Now, also, I'm going to assume that this year revenue growth is going to be 40%. I mean, based on guidance in Q1, it's actually been more than that. So, you could also call this kind of conservative. And then after 2024, I'm going to say that revenue is going to, slow down and grow 30% per year just because companies get larger, it's harder to scale. But nevertheless, based off guidance, that's very conservative. Okay, right now we're making $53 per subscriber, and I said in 2030 we're going to be making $61 per subscriber, so just slow increases. Actually, this is super conservative, and I think this number is going to be much higher than 61 just because, you have the weight loss drugs coming out, and they're going to add products here and there, and people are going to do that, so that total mean per subscriber number is going to go much higher than $60. But I'm trying to do a conservative estimate here. So let's say they do $61 per subscriber. Okay, so in Q1 we had 11.6 EBITDA margin, and at the end of 2023 we had an average of 5% EBITDA margin. Okay, so we're going to go up, and that's because of the marketing spend. We're spending a lot on marketing. But marketing can be slowed down once we get a ton of subscribers. They're doing it on purpose because they want people to join HIMS. They want more subscribers. So you have to spend a lot of money on marketing, right? So your margins are naturally going to be lower. So at the end of 2023, we had a price to sales of about 4. Right now, we're trading around 5 price to sales. Okay. So I said, okay, let's say in 2030, we're still trading at a price to sales of 5. I mean, I think it's going to be a lot higher than 5. Well, why do I say that? Well, it's because our margins right now are around 10, 11%, right? The margins are going to go up because when you become a bigger company with tons of subscribers, you don't need so much money in marketing and growth, right? You can trim that fat down. You don't have to spend as much cash, and all of that will go to the bottom line. So the margins are going to get better. So naturally, the price to sales that institutional investors and everyone are going to price it at is going to be much higher than 5. I mean, even right now, I think 5 is super low. But I just say, hey, there's no expansion on the price to sales ratio or anything like that. It'll just stay at 5. Let's just say it stays at 5. I think it's going to be much higher than 5, but let's just say it stays at 5. So we're talking about, let's say this is close to 5.9 billion. Okay, price to sales ratio 5.9 times 5, right? You're getting very close to 30 billion. That means, let's just say for the sake of it, we're at a $30 billion market cap. Right now, we're like 4.7, 4.8 billion market cap. So from here, even with these more conservative estimates based off the margins I told you, the guidelines that management has set out, we're talking about a, $140 share price from here, okay? Because, $30 billion in revenue, and that's without any buybacks. They did mention the buyback recently, the $50 million buyback. They're probably going to have more buybacks in the future, or maybe they'll just focus on growth. I don't know. But this is without any buyback, with the same ratios of today, which should expand, but you're looking at a 6x in 5 years, which is amazing because usually you just want to double your money at least in 5 years. So I think HIMS is a really great buy right now, and I think it's really undervalued even though it's run up a lot this year.